Well, thank you so much for joining us. Happy Friday to you. We made it to the end of the week almost, but we still have this little hurdle called a trading session to get through before we get to the weekend here. I'm Marlon Bowling, your tour guide to these ag commodities, and it's going to be an adventure we know already from just watching the overnight trade. I want to welcome aboard Brian Hoops. He is the president of Midwest Market Solutions. He hails from Springfield, Missouri. And he joins us right now. All right. Don't even know where to start, Brian. About first things first, let's start with some fresh information just off the wire as I was coming into the studio here. Brand new overnight export sales. We'll start there. The headline feature today is it's 3 sales. The subheadline is it's all soybeans. And here is the rundown. So we had sales of 125,000 tons of soybeans to unknown destinations. It was all for the current marketing year. Keep that in mind. Then we had 108,860 tons. Sometimes when that's an odd figure like that, that means Mexico. And it was this time. They bought soybeans. And we had a sale of 106,000 tons earmarked to China. Now, the odd thing is, each and every one of those sales was for immediate delivery or current market year delivery. That's unusual in itself. We haven't seen that for a long time. And let's look at the overnight trade. Janet and I were talking about this here a short time ago, if you happen to be tuned in at that time. May corn overnight, 30.5 cents higher at 778.25. That's where we finished up. That was about 4 cents off of its overnight high, which basically would have been limit up. The December contract, 23 cents higher at 6:35 when we headed into the end of Globex overnight. Now, with our quotes provided by bar chart, let's examine soybeans. We had the May contract only 13.5 higher at 1681.25. That was about 4 cents from its high of the overnight trade. The new crop November soybeans, they traded only 2.25 higher at 1456.25. Even with all the overnight sales business, the flash sales over the past 2 weeks of soybeans, you know, that market doesn't appear to be all that terrific right now. If you look at wheat, this is the one we were talking about. May, July, and September Chicago wheat all expanded limit higher last night. And in that May contract, it didn't even trade. You'll note that the high and the low are the same thing. No trades. Kansas City wheat, May, 75 higher at 1225.25, but no trade. The high and the low were the same, so didn't even have any transactions overnight. And if you look at the Minneapolis spring wheat trade last night, May was 60 higher. That's the limit in Minneapolis. So there you had a wide range there, but it ended up limit up. Brian, we have the crude oil going sharply higher this morning. The Dow is under pressure. The dollar over 1,000 points higher today. Right now, crude oil over $4 higher. It's hard to know what to even use for direction here on the ag commodity markets. What do you do today?
Yeah, it's a really strange environment because you have the wheat market, which is absolutely just surging higher, and our export sales are just terrible. We're not competitively priced on the world market. So I know we want to try and say that wheat is moving higher on ideas the U.S. is going to be able to export and take the void from the Ukraine and Russia, but I don't know that that's the case. I think this is a lot of short traders being caught short and margin call type buying. They're just trying to get out at any price possible, and the market won't allow them out, and the CME is not expanding limits to allow them out, which I don't understand. The soybean market, as you mentioned, has really good exports. We've been seeing a lot of strong sales this week and last week, especially for this old crop market now that some of the estimates are coming in for Brazil's crop to be downgraded again next week. But the soybean market is really the laggard in here. And if you talk to a country elevator, notice that your cash bids at your elevator for the corn market have really softened out. Not only has the basis widened out, but a lot of these elevators are moving out of the May into July or September even to give you a cash bid. And that's because they are full. They don't want your crop anymore. They can't get rid of it. And that's just a reflection that demand for corn has not been that great. But yet corn market is following the wheat, and we're seeing just a surge higher for those markets. So there's a lot of people that are kind of caught on the wrong side of this market. And it is very strange on how we are trading from a fundamental standpoint. You can make the case that we do need to buy some acres for the new crop corn, and we probably are at the 635 area. But unless soybeans continue to move higher, corn really doesn't need to move higher either.
Wow, that is some fascinating stuff that you can have a surge in the market like that and basis really falling out of bed at the same time with full elevators. My goodness. All right, we'll pause right here. We'll talk about the livestock setup here for a Friday when we come back. Well, let's go back to our talk with Brian Hoops of Midwest Market Solutions. Brian, what does that mean here for our livestock producers when you have the grain just never-endingly going higher? How do you handle this?
If you're feeding corn or you still need to buy some corn, you're getting a wider basis. You can go to a lot of your local country elevators and buy about anything you want because they're having a tough time moving it. I'm hearing they may have to carry some into the fall. They just can't find a home. So for a livestock producer, your basis is widening out and your cash is getting a little bit cheaper if you want to buy it. And if you've got things locked in on the board, you're seeing big gains on your futures of contracts. So it's kind of the best of both worlds for a livestock producer. The higher corn prices have been hurting the feeder cattle futures, but I think we're going to get into some tighter numbers into the middle of the month, and the cash market will come back for live cattle. And it seems like the demand earlier this week was very strong in the sale barns for feeder calves, and that should bode well for prices longer term.
Well, I know I was asking you in the last couple of days, but are we finding support or near support on the feeder cattle market right now? They've had a big drop.
They've had a huge drop, and so we should be finding some technical support. Problem is the corn market moving higher, the real concerns about the economy. You have gas prices just surging overnight in the last several days, actually to some real high levels, and there's a concern about the economy and how much consumer spending is going to used for high-priced beef or pork products going forward into this economy, into this spring and into the summer months. We have to have good demand to work through some of these supplies that we have of both beef and pork.
April feeders were down 247 on the close yesterday. And just recapping the live cattle, they were down. We had April down $1.75 on the close yesterday. And lean hogs, well, they wrapped up the session with that April contract down $1.10. We'll see if they can turn things around today or not. Thanks, Brian, for the help. Brian Hoops of Midwest Market Solutions. I'm sorry, Brian. It's Friday. Anyway, he's in Springfield, Missouri. Janet, with that, I'll turn it back to you.